Hello and welcome to the special episode of FinTech Diary on etbfsi.com by the Economic Times. Friends, I'm sure you're doing good. Uh, Currently, there is only one flavor of the season, which is an IPO. If you look at the stock market, capital market, and everywhere, everybody is talking only and only about IPO. So we at ETBFSI decided to do a special episode on fintechs, specifically looking at IPOs or those who are already come with an IPO. So thank you so much for being part of this conversation. And let me let me introduce my speakers to you first. I have with me in this particular special episode Upasna Taku from MobiQuick. Upasna, glad to have you. I have Akshay Mehratra from Five. Akshay, glad to have you. And I have Sagar Agarwal from Bean. Sagar, glad to have you.
Thank you, Amol.
I think Upasna is going to join maybe in few minutes. But great to have you, Akshay and Sagar. Till Upasna comes, maybe I will start with you. Uh, I think the world is all about IPOs now. Everybody is just talking about IPO. And Sagar, you will be following this more because being an investor, that comes the top on your priority. In fact, I was looking at SEBI data, and more than 70 companies have already received an approval for an IPO this year. So Sagar, let me begin with you as an investor. When a lot of fintechs are, in the process of filing their DRHP, and few fintechs have already filed their DRHP, and many fintechs, or at least a couple of them, have already. What is your view? How important the IPO segment for the fintech?
I think thank you so much, Amol, for having me, and Akshay, good to see you again. For us, I think as you rightly mentioned, being an investor, the road at the end of the tunnel and the light at the end of the tunnel is very, very important, right? To understand where the company is headed from a long-term perspective. So for us, IPO becomes extremely important. But more than the investor standpoint, Amol, right? It's more relevant from a company standpoint, right? And the way we think about it is that IPO is the holy grail at the end of the day, and it's a moment of truth for all business owners in the world, whether you're a tech or a non-tech player, whether you're a fintech and financial services player. It's a moment of truth for everybody, right? IPO gives you a visibility. IPO gives you transparency, visibility. It gives you a monetizable asset today, right, which is your stock, which can be used to create and acquire newer assets, newer businesses, newer opportunities. Your accessibility to capital becomes much more cheaper, better, faster. You can tap into foreign resources. You can tap into foreign investors. All of these becomes much more easier, right? Uh, with the option to list the company. And given the way public markets are today, Amol, right? Interestingly, we were doing a study lately where in the 2016 to 2020 cycle, $20 billion was raised by the companies in public market in India, while 2021 to 2025 cycle, $50 billion was raised by companies in public market in India. So two and a half time of the capital raised in the first tranche and the compared to second tranche. And if you look at number of fintechs, right? Today, 28 to 30 odd fintechs are listed in the country with a market cap of roughly $50 billion, right? Is the market rightly represented from the fintech standpoint? We think there's a lot of opportunity to list high quality fintech companies which are getting built out in the private space, take them public, solve for these problems, enable those companies, create more sustainable businesses. So definitely markets are ready, businesses are solid, companies are turning profitable, and Akshay's company obviously is a phenomenal example of how the companies are going in that direction. Pasna has already listed a company as well. So I think in all direction wise, I think the opportunity is today, and we should definitely all proactively push. We are taking some of our companies public in the next 2 years, right? So we should all collectively push and take these companies public and create a larger representation of the sector, which is a very important sector of the country in the public market as well. So definitely, I think we are very
Okay.
bullish about what's happening, and all these founders, we're definitely supporting them to take the company public as well.
Okay, okay, Sagar, noted your points. Upasna, glad to see you.
Great to be here. Thank you, Amol, for having me, and lovely to
Sure.
see you, Sagar and Akshay.
Yes. So before I come to you, let me shoot my question to Akshay first now. So Akshay, you heard Sagar who spoke about investors' perspective, specifically why they want companies to go for an IPO. He in fact gave few numbers as well. Upasana is already listed. I'm sure you will also have your plans to go to capital market soon. But at this stage, how do you look at IPO? Do you think IPO is one of the integral part of a fintech company who's quite matured, and that should be the ideal goal?
Yes, well, if I say there's a growth story of any enterprise, and fintech and lending is also very interesting because lending entities need to keep raising more money to continue the growth story. It's a leverage business coming in, right? It's very interesting to see. I think companies believing that there is a early IPO opportunity, and we have seen many companies follow that bandwagon. I'm a believer that there's a process followed. You mature from, let's say, uh, VC money to PE money and then go to listing. There's a path to that. So you can build out a larger appetite for market and also make sure that the company continues to grow and build out larger outcomes. If you look at in our business, our journey has been we have done almost 6 rounds of institutional rounds. The last 3 rounds have been backed by PE funds. It's given us the leeway to continue to build every year and then, let's say, have a very hyper growth as well as very meaningful business operations. But last year, we went and listed our debt as the first part to having more public disclosures in the Bombay Stock Exchange. We got our debt listed, and we actually saw that corporate governance becoming really good at the company level. Like
Hmm.
reporting standards became, independent board structures came in. It's a great preparation for organization which need to go full IPO on the equity side also. Right? As you mature, we believe larger outcomes are possible. And the good part is the market today is respecting profitable companies in a very large manner. So public
Right.
companies have public understands that profit motivated organizations have outcome possible, and we will see that fintechs and especially lending orienting fintechs can flourish and build larger outcomes for all investors at whichever stage they come in, which is a great sign to be.
Hmm. Sure. I think those were remarkable opening comments from both of you. I will obviously come to you and try to dive deep here. Upasna, let me come to you. I mean, we have been meeting for so many years now, but I remember our conversation in 2019, and that was the first time you says you have a goal of an IPO. Now you are listed. What has changed for you specifically after an IPO?
Uh, so Amol, nothing has changed. The mindset of growth continues to be there. The mindset of delivering, financial solutions or fintech solutions for Indian users, merchants continues to be there. I think in a way, just say the way you think of a child, right? You go through from baby to toddler to teenager, and then you become an adult. I think it's a progression, natural progression for a company, is what I think. And to that extent, maturity of governance, maturity of how to build the business, consistent financial delivery. I think it's a more credible way of building the business, and I think it's just I think an opportunity for founders as well as businesses who want to build for the long term and not for a short term sell out. If you want to build a long term sustainable business, I do believe that going for a listing is the right path, because it sets you up for a long term growth. You figure out a way in which you're going to build the business not for 2 years, 5 years, but how are you going to build it for decades. So I think not much has changed. It is just that it's a good public badge of credibility. It helps with regulators, it helps with partners, it helps with consumers, and it just shows progression and maturity as an institution that you're trying to build.
Hmm. Sure. But again, it's been long, so many years that you wanted to come for an IPO. How long generally does it take actually from a filing stage to hitting the capital market? How long did it take for you?
So that's a fair question, Amol. I think that at least 1 or 2 years is what one should think of as the overall timeline. I can tell you from MobiQuick's perspective, we did do a filing in 2021. I would say that our readiness was not necessarily there, but the market was very receptive to new age companies coming and getting listed. So we also gave it a go. If I put my hand on my heart, I will tell you that we were not necessarily 100% ready. We had to really work very, very hard, exceptionally, to get there. But of course, at the time, what we saw that market conditions changed, the market was weak, so we abandoned those plans. And then we made up our mind that we will again come back to the market only when we have shown consistent growth and
Right.
profitability, not path to profitability. So you will notice that we filed in early 24, January 24, we filed.
Hmm.
And by that time, we had done 4 quarters of profitability. So we were very confident that we know how to grow while being profitable. And typically it takes 6 months from filing to complete, 6 to 7 months, depending on if there's a market cycle, economy cycle, etc. I think it took us more than that. It took us almost the full year, because we got listed in December. But that
Right.
was because there was, a major black swan event in our sector, which sort of really hampered and created a sort of a negative outlook for our sector, more so than for us as a company. So we had to work a little bit harder. But I can tell you that this time we felt far more confident and capable, because you'd done the procedure once, so the readiness was there, the ability to take the right calls was there. And so I'm quite happy that we were able to get it done in 24.
Oh, sure. I think those are good insights for the new age companies who wants to actually list. Maybe they should be focusing at readiness and how long does it take. I will again come back to you in some time and try to understand how your life is now settled between quarter to quarter results. But let me let me go to Sagar. I would also request audience, if they have any questions, they can shoot it directly to us. Uh, Sagar, one interesting thing that I have seen now is, again, public markets are very important. It adds a credibility badge to you. Regulators look at very seriously. All those benefits are there. But do you see now, as so many fintechs are going to capital market, is also because investors are pushing them because they are also looking for an exit?
I think exits, as I said earlier as well, exits are a must for investors, right? I think to take cues from what Akshay said and Upasana also said, right? It's a journey of a company. More than investors pushing for an exit or investors looking for an IPO, it's a journey of a company. Company needs capital consistently to grow the business and create a large outcome, right? Financial services and fintech is a space, Amol, where $1 billion to $10 billion to $50 billion to $100 billion outcomes are possible if you know how to build a company for a long term, which means you need long term capital for that and you need consistent capital for that, right? So capital market is the right place. Indian private markets are not as deep as the US and European private markets, right? So we cannot, most investors are not able to sustainably provide longer terms of capital and stay private for longer term. So you need to go public because the capital availability is much larger in public markets. It's a lot more sustainable capital. And if you continue to perform, you will get that capital, right? So the benefit of listing is not necessarily just from an exit standpoint for us. The benefit of the listing is to actually enable a sustainable organization to be independent, list, and run the company from that thought process. So pressure from investors is definitely there. But that's not the only reason for us to push our companies to go public. We feel that the organization will become a lot more sustainable and stronger as an institution and be able to build a larger outcome for themselves, for their shareholders, and public market should also get a representation of that market at the same time. So it's a combination of both. Yes, we will always push for exits because that's the nature of the investor being that we are. We all have close-ended funds, right? So we all have to report distributions to our LPs, right? So that's a challenge for us. But beyond that, we keep company at first. We keep the company's business model at mind. We're founders first mindset, always investors, right? And try to see if company is ready to go for an IPO. Because you can't push company for an IPO if they're not ready for an IPO, right?
Right.
Doing early is also detrimental. Doing too late is also detrimental. So there's a time, 10 to 12 years in the life cycle of a company. That's the time the company should prepare for an IPO. And at the end of the 12-year cycle, 13-year cycle, you should start looking for listing the company.
Sure, I think that was meaningful one. So Akshay, I think compared to many other fintechs, maybe those who are dedicatedly operating in payment space or those who are absolutely in SaaS, I think lending still has an upper hand because everyone sees the model where lenders can make money, if not today, maybe tomorrow. So how's the conversation between you and maybe your investors going on whenever you think about public listing, whenever you think about an IPO?
See, I think banks, NBFCs, or fintechs, they're all in lending. The answers are very clear. You need to be profit generating. You need to be ROA, let's say, upward trajectory, and generating leverage on it, generate a high ROE. Very clear models are understood, and from public markets to private markets, everyone has made money on them,
Hmm.
right? So the only point which is different, like any other business, is in this business, disproportionately large companies can be built. Right, we have seen one of the largest companies, Bajaj Finance, got built in the country. We have seen enough number of NBFCs or banks getting built in, and we also see the opportunity of building large ROA businesses. I think the only difference is ROA to ROE happens in leverage, right?
Right.
And it is very difficult in the private market to get high lever in the
Hmm.
market. Beyond, let's say, 3.5 times lever, it gets very difficult unless you are backed by let's say, a industrial house to go and get a high leverage on your NBFC, right? And that is why I think the public markets will come to a great amount of benefit, with rating agencies will will flavor companies with better corporate governance and which are listed. And at the same time, many, and as the rating improves, you can get access to more uh, ac- credit lines across the space from, let's say, double A rating companies comes in, which means that you can go and lever better. Now, unless
Hmm.
that happens, you can't build an ROE business. So it's a journey of building out an FS company which takes place. Outcomes are, um, I would say, every large PE fund has taken their company to IPO from a single perspective, that to build a larger company. And if you notice, most of them haven't really sold their stakes. They still continue to hold the stakes for a very long window, right?
Hmm.
And that is the difference in the investor community. In financial services, they hold their investment even after IPO, because the
Right.
company seems to grow disproportionately large, versus in non-financial services, usually investors exit at IPO. That's the difference in understanding and category play, and we see that as a huge differentiation. You need to build a very large, sustainable business. If you're lending first, you need to understand the ROA, ROE multiples very well, and you build out a larger organization behind it. At the same time, unlike other markets, the Indian, let's say, the stock market is also very mature, and the Indian banking market category is also a very mature category, right? So which means that both of them can fuel into build large enterprises. And if you look at the top 500 companies, majority of the banks feature, the most traded stocks, also the banks NBFC stocks feature there, which is a great site, which means that you can go and build out FS large opportunity markets in the market.
Okay, sure. I think noted your points, Akshay. That was meaningful one. Upasana, you gave a great analogy of how toddler, teenager, worked for you, or how's that journey. And though you say that nothing majorly changed, but I'm sure indirectly a couple of things must have changed. So, on a lighter note, do you wake up every day in the morning and the first thing you do is check the stock price? Does that bother you? Does that disturb you? And more importantly, does the pressure now has built up on showing the profit, giving a hard, remarkable performance quarter to quarter?
So, firstly, no, I don't wake up in the morning and check stock price, because I think I like greenery more. So I focus on plants and a little bit of walk and all of that. And also, I've realized, there are times when you look at the stock very closely, and there are times when you don't even look at it for days or weeks on end, unless something major has happened. Because as a promoter, as a founder, your focus is on building the business, and build existing businesses, start new businesses, hire the right people, inspire your leaders to take things forward. So I think that continues to be the charter. Of course, quarterly results presentation, timely closing of numbers, audits, governance, board meetings, all of that, of course, has a play. But I think that last couple of years we've seen so much maturity in the ecosystem. now when you're looking at this pipeline, I believe there is a pipeline of about 50,000 crores in the IPO pipeline. I mean, in terms of companies coming. I also see that from a investor perspective, retail investor perspective, there is so much interest in participating in the IPOs of companies that they use as consumers. Now, whether it is a food company or whether it is a delivery company or whether it is a payments company, because it's a service that a consumer themselves has used, so they have some understanding of that business. I think that the market is maturing, and as a company, what I can tell you this year, because of everything that has happened, we see now more and more companies that are coming to the market are not companies that are showing vanity growth or only GMV growth. Companies are coming with positive unit economics. Companies are showing how we are going to go from X to Y to Z in terms of PAT in the next few years. I think that is a good thing for our ecosystem, and I think. It's going to create more long-term longitudinal companies. As for what has changed, प्रेशर तो हमेशा से ही था. प्रेशर जब बैंक में पैसे नहीं हो तो ज्यादा होता है. अभी बैंक में पैसे तो कम होता है, but pressure to perform is always there, right? Because you're still a high growth company. So if you do 5-10% growth, then I wouldn't really be happy, regardless of whether shareholders are happy or not. Personally, I would not be happy, because you know that there is a huge TAM and there is a large opportunity that you can go after. So personally, for me, next month we complete 16 years as founders, Vipin and I. So I think what keeps us going is to keep, pushing the envelope, keep pushing our people to do more. I think the idea is that we want MobiKwik to become a permanent player in the large and evolving fintech ecosystem of India. And so we want to play different hats in this industry.
Yeah, that is a good one, Upasna. I think thanks for sharing that.
I should add one thing over here, Amol.
Yes.
Now the PE funds are going for listing, so we also have an opportunity to list, right? So the first one is going out. Gaja is going out for an IPO, so that's actually creating real value for the asset management industry also, right? Because alternative industry was not listed for longest time, right? So this is the first time where we are getting an opportunity. So this is just another example of the depth of the market, right? You started with the payments businesses. The more and more lending companies are going for an IPO. Enterprise SaaS businesses are going for an IPO. All the asset management, wealth management, I would say commerce businesses are going for an IPO at the same time, right? So the whole breadth of financial services, fintech are now available for people to invest, provide support, and grow the business at the same time.
Sure, but noted, Sagar, no doubt about it. But the question that I also have for you, Sagar, is now IPO has become an integral part for the investors to exit. But not all the companies have given better returns. And I'm not just talking about the fintech companies which has listed at XYZ and now trading at below half the price, but also the top companies, including even Tata Tele, right, listed at very higher price and now trading at a value which nobody expected. So does that bother the investors? Because ultimately IPO was one of the best or one of the most important exit option that they were looking for.
So Amol, I think price performance or stock performance post listing, right, is anybody's control, because there are multiple factors at play when a company lists and how it trades in the market, right? There is overall sentiment about India. There's overall sentiment about public markets. There's liquidity in the Indian markets, which is very important. There's liquidity in global markets, which is very important. There are global geopolitical factors which impact. So stock price movement beyond the company's own performance, right, also has a lot of other variables which impact the performance of the performance of the share price in of the company as well. However, I think as a market breadth increases and depth increases, more money comes into the ecosystem, right? Today we get $3 billion a month in the SIP flows, and with lump sum and all, we're doing $6 to $7 billion a monthly flow in public markets, right? All of these monies will eventually go into high quality performing companies, right? And they will help those companies stay above from the price that they were IPO'd at, right? I think IPO is a function of trying to not maximize the price, trying to be the right price company in the public market so that investors also make money at the same time. Very important. Retail investors, think about retail investors also. They also want a 20% return on their investment, or a 15% return on their investment year on year. So if you're not leaving enough and more on the table, right, as an investor, as a founder, then I am not allowing the investors to make money in my company, right? And it's a function of that aspect also, plus the performance. How do you narrative? How do you communicate? How do you control a narrative? What surprises do you have in the package? How predictable your businesses are? What are you sending the message to the market, right? Too many factors come together, Amol, to determine whether the price of the share remains above or below the IPO price post listing. A lot of founders are also listing it for the first time, so they're going through the journeys for the first time and experiencing the thought process in terms of what the public market analysts are looking at. They are slightly more brutal than we are. I would still say we are still more easier. Public market analysts are very, very brutal, right? You say something, even a single mistake on a con call, your stock will be down 20% tomorrow morning, right? Whether you like it or not. So I'm saying you have to be a little bit more prepared as founders, right? And more structured in your thought process. It's a lot of work required, as Upasana said, a lot of work required to be ready, to be prepared to go for an IPO. And then over the period of time, stock will go up and down, doesn't matter. If the businesses are growing, doing well, it catches up eventually.
Okay, Akshay, two questions. One is from some audience who's asking. I think I had asked you this also earlier when in our interaction. The question is, when are you going for an IPO? When is Five going to file an DRHP? That is one. And my question to you is, any which way regulators are far more active when it specifically look at the RBI or the central bank. Lending has become very tough. Why do you want to go for another regulator and go for a very terrific regulated area with coming an IPO?
Okay, so maybe I'll take the second part first.
Sure.
We see, this is interesting. Lenders understand one single perspective, that you have to work on the realms of the rules set in the business. So the regulator is the most important piece. He sets the rule, and you follow his rules to the T, right? And that is the art of, I would say, lending in any market. That if you understand law of the land, you can do a good job of it. If he means the regulator or the governing bodies like you, everyone around you will love you a lot. Right now, if I follow that principle today, see, we listed our bond some time back, or our debt some time back, and we got some exceptional results. Most of our NCDs get subscribed in a few minutes of pushing out the issue almost every alternate month, which is a great indication that we can raise debt in the market, and we can build out a larger entity. As corporate governance becomes better, and like Upasana said, you go from walking to crawling to running to becoming something with 2 wheels to 4 wheels to having a supercar. That journey you have to become as an organization. I would say we have just started to run more efficiently, right? We believe that we will skyrocket soon, and that journey we will have to go IPO for it, because we need to lever much more, and we have to be prepared for that space. On the other hand, when can we go IPO? I think this is something which is more in control of, in our case, of the company, rather than the structuring and hours and profitability. We are profitable. We do generate very good ROAs, and ROEs. The question for us is when the timing is right, and when we need to have more leverage kicking in. So we are very fortunate that we continuously have been able to raise money from in the private area from very marquee private investors, TPG, Norwest, Fidelity, etc., or Eight Roads, etc. We have really good funds who have backed us, and that has given us the leeway to say that we can stay private for more time. But I'm hoping that if we are able to execute a much larger company in, let's say, a few more quarters, we can definitely attempt the idea.
Okay. So no specific deadline and timeline, Akshay.
I think as you understand, you need to start answering every question the right way, and the journey starts much earlier.
Noted. Noted. Very good, Akshay. Upasana, I think let me try my luck more to learn from you specifically on the growth part. Though you told us your journey, how was the process and everything, and regulatory aspects as well. But now you are already listed, already a very, very responsible company and a matured company because you have been there since more than a decade. do you think that path to a higher performance and growth, specifically after listed, is slightly seamless now because people, shareholders look at you, the market, the customers look at you with far more responsible company?
Yeah, absolutely. So two things I'll say. Firstly, on the sector, and then for ourselves also. I think overall for all tech new age companies, what I want to say is that see, markets in India are doing fabulous. Something plus or minus will always keep happening, but overall market sentiments are improving. I think that regulatory clarity in different businesses is strengthening, and so I don't see that there is any doubt in my mind that for all new age or tech companies, I don't see that profitability being on the horizon is a problem at all. Some are already profitable and some will turn profitable because they're growing nicely, and whatever were the macro factors or regulatory uncertainties, I think they're only improving. India as a country is becoming more and more startup friendly, to that extent. So I do believe that India's capital markets will get a capture from tech driven companies. I think abhi bahut kam companies hai. I think that's going to go up significantly in the next 5 years. And maybe 25 or 25, end of 25 and 26 can be that defining pivotal moment where again a large number of companies will go public. As coming to our own performance, I will say that see, we have a very supportive regulator in RBI, and over the long term I have seen more and more progressive measures coming. Tactically things may go on and off, but overall I think that the stance that the RBI has towards the industry, towards fintech players, is quite positive. And I can tell you that we have about 3 or 4 licenses from RBI, and we also have a license from 2 licenses from SEBI, and we are also listed, and that is also with SEBI, right? So I think that SEBI is also becoming more comfortable and accepting of tech driven companies. And I think both of these things are fabulous for MobiQuick as well as for other fintechs as well. And so I think with this backdrop, achieving consistent growth, achieving bottom line performance in terms of profitability, I think it is just a matter of time, for us as well as many other players who are trying to scale and then break even. As I mentioned, of our last 8 quarters, the results of which are publicly available, 6 quarters we were profitable. So two we have gone red, and I am expecting that we will start showing growth with profitability fairly soon.
Okay. I think that was too good, Upasna. Sagar, my question is in two parts now. First is I have been tracking this space since really long, and maybe 7 8 years back when fintechs was slightly new, nobody spoke about IPO then. Perhaps very few companies spoke about an IPO, and now everybody talks about an IPO. So what has changed according to you? One, at the same time, the investors are going slow. Uh, Raising fund has become very difficult. In fact, if you look at 2021, more than $4 billion had raised, and now it has just come to almost $1 billion. So does this mean, broadly, if I think that then there was a time when investors wanted to pour money, but now that tap has been closed, so the companies want to go to the capital market? Do you think so?
Amol, to your first question, right? I think capital markets cannot be as buoyant as it is today, right? I think we've got one of the best times to list in public markets today. I think investors are globally, it's a global institutional investors. When we talk about them, all the FIs, the hedge funds, the global insurance, pensions, or sovereigns are very keen and excited about investing in India. Not that capital is flowing in rush, but capital is coming from foreign markets. Our domestic capital has become very, very strong, right? With $3 to $6 billion of money coming in every month from SIPs and mutual funds and insurance companies and pension funds, all of those combined, right? Plus the AIF and the PMS, right? So, $6 billion to $7 billion coming every month. So I don't think there's a dearth of capital, right? Both in the public and the private market also. People are choosing quality over quantity now, and that's a very important aspect to note, right? People are choosing founders who have survived, who have built, who sustained, and people want to see longevity, right? And if you're able to bring the right set of conversations to the table, right set of narratives, right set of opportunity for people to back you, capital will always come. I always believe one thing, and which we have maintained in every conversation, that good companies always get capital. How whether it's a bad market or whether it's a good market, you're a great founder, you're building a good business, you're building a sustainable organization, you will get capital. Pricing can go up and down, but availability of capital is never a challenge for good companies. So think about it from a building perspective. If you're building, you need to build a sustainable business. Capital is always available, and I we feel that 2026 to 2030, right? Another 5 year cycle. So I'm breaking this into 5 year cycles, right? 2016 to 2020, 2021 to 2025, and 26 to 2030. This 5 year cycle, we will raise more money in public markets than what we raised in the last cycle. In last cycle, India raised $50 billion. Previous cycle, $20 billion. I'll be surprised if India crosses $100 billion in IPO capital raises in 5 years' time, right? And that $100 billion will not only go to traditional businesses or defense companies or infrastructure or manufacturing. A large part of that will go to fintech and financial services, right? That's the bull call we are taking as a fund manager, as an asset management firm. That next 5 years will be very, very bullish for good companies. Valuations will go through their own journey. Demand for financial services and fintech businesses are solid. Interest rate cycles are down. Regulatory regulations are in favor. Businesses are proven out. Markets are discovered now. So the cats are no more crazy, right? What they used to be 10 years ago. So markets are getting better discovered now, right? Business model unit economics are much better. Public market analysts are smarter. They know how to underwrite these businesses. They are no more guessing over here. So the conditions are a lot more favorable, Amol, from the private market perspective and public market perspective also. And we'll be surprised if the markets don't react in the fashion that we are thinking, unless something changes globally and our Blackstone event happens.
Sure, sure. I have one common question to all three of you, but before that, I will take one question, which I think there are a couple of questions, but I think many of them either has, I mean, come in your conversation or maybe we discuss. So I won't take those for, to avoiding repetition. But this question, again, part of this we have discussed, but let me just read it out and anyone can answer it, Vipassana, Akshay or Sagar. The question is, are fintech IPOs signaling a sustainable maturation of the sector, or are we witnessing a cyclical surge driven by temporary economic conditions? Some reader has asked this question. Anybody wants to take this?
So maybe I'll try the first attempt.
Sure.
I think it's both, right? We have seen substantial growth in the categories since COVID. Just an indication, at the end of COVID, we were 170 crore net worth or 170 crore balance sheet also. We are now touching almost 6,000 crores AUM, right? So there's a disproportionate growth post COVID has taken place, right? And fintech as an industry has really become sizable, impactful, and able to demonstrate impact. The second part is as leverage kicked in, the larger ecosystem seems to be backing the entire piece. So banks opened up co-lending, guidelines became more clearer from the regulator on digital lending. Similarly, lots of new opportunities opened up where you can really build out sustainably large business. And coming in on more L&M models allowed OPEX to come down also very sharply, which means the profitability across the board is showcased in a good structure, right? Which means that when you are a stellar company, you can showcase you're doing well, right? And today you have the showcasing capability also across the landscape that you're doing well.
Right, right.
And at the same time, when you look at the public markets, they will always look at a company which is differentiated, can show consistent result, is sizably large, and has a TAM which is large enough for it to continue the growth pattern. Right? If it grows at 30%, to continue to grow for next 10 years, 15 years, then it says, yeah, this is an area which I can understand and I can invest in. And of course, today markets are doing well. It is I would say, the after many years, the golden era of IPOs is here. We already are here of 150 IPOs lined up to open up, right? And we expect maybe another similar number over the next 12 months more to jump in the bandwagon. Right. So there is going to be a good run, and there'll be lots of opportunity. And if I look at HDB, It's a lending IPO, the second largest IPO in the country, which came in, subscribed more than 20 times, a brilliant subscription. Which means if you just look at the liquidity it created, that on the it can fuel almost 40% of the IPOs alone. Or
Hmm.
what is the liquidity grade for one company in the market,
Hmm.
which is a very heartening position to be in. You will see large number of IPOs, and no more the IPOs have to be for technology oriented companies very large. There's a market for, let's say, 1 to 3 million. There's a market for 2 to 5 million. There's a market for $5 to $10 billion IPOs, which is a
Yes.
very healthy market. That there's a market for every category type which is available.
Hmm. I think that was a great construct, Akshay. I think because of the time is limited, I will shoot my one last question to all of you, and maybe you can answer one by one. So again, what is driving the surge in IPO is great high frequency indicators. All the economic indicators of India doing really well. Like Sagar mentioned about AMC, and every business is showing well. GST collections are robust. Unfortunately, every global financial firm is betting really high on India as a growing and the fastest economy, which is all the positive. But when we look at the broad terms, what kinds of growth all of you are seeing in the fintech space? Again, there will be ticket size. Somebody will be between $50 million to $1 billion. But are we going to see the fintech companies maybe better than more than $1 billion, $2 billion coming to the market and raising more capitals, going to get subscribed like an HDB or something like that? So, in a way, if you put it very short, what kinds of growth do you see in the fintech area? Because it's a time of new age companies coming to the market and not those typical manufacturing companies used to come to the market now. Uh, how do you see that maybe for next 2 to 3 years? Uh, Upasna, let's start with you.
Yeah, sure. I think Akshay and Sagar have explained well. I think there is a lot of depth in the Indian market. There are takers for every sort of scale of business, and to that extent, I think that it will not just be the billion-dollar or unicorn plus companies that will come to the market. Companies anywhere ranging from $200 million to $20 billion valuation might look at the capital markets as an interesting thing, because while the main capital markets are doing well, it's not that the SME IPO board is not doing well. That is also doing well, albeit that there have been one or two instances of governance issues in some companies. But I think that overall the market has been very receptive to new business models, because they are understanding these business models as their consumers. Most of these are B2C businesses, and B2B businesses are also large. I think if I just look across the fintech spectrum, I know, Akshay and his company is looking at IPOs. I know several other lending companies are looking at IPOs. I think among payments, Pine Labs has already put in their papers. I know PhonePay is on the anvil, Razorpay is on the anvil. So I think that all scales of companies, will probably come to the market anywhere within the next 12 to 36 months. And there will be reception that audience that they will all receive. I think that there won't be any challenge for anyone, whether it is a $1 billion plus company, or a 2,000 crore company, or a 20,000 crore company. There's ample depth.
Right.
I think the major factor that investors are always concerned about, and by the way, I didn't mention this, but traditionally also BFSI is the largest sector in the
Yes.
Indian capital markets. Because BFSI is the largest sector, so all the players, all the mutual funds, all foreign investors, all the houses have a very large team working on financials. And अब उसमें से क्या हो रहा है that they are earmarking a few people from the technology tracker and from the financials track to now look at fintech companies. So they understand the business models very quickly. They may not understand all the facets of consumer businesses and CAC and why tech spend is so much, etc. in the beginning, but they understand the core business model, whether it is a payments business model, a lending business model, or a investing business model very quickly because
Right.
of that. That's why the interest in fintech is the highest, is what I wanted to say, because financials is such a large sector and is of interest to all investors.
Absolutely. Sagar, you want to go next?
Yeah, I think Basna, our fund thesis is based on the fact that fintech and financial services is the largest sector in the country, right? Whether we like it or not, and we continue to maintain the fact that the opportunity within the categories, within the segments, is enormous. In fact, to extend that argument, Basna and Akshay and Amol, what we're doing a report. So every year we do a report with Global FinTech Fest, where we capture a particular conversation. So last year we captured the conversation of a journey of a startup in the fintech space to an IPO and what is required to build a company to get to an IPO. This year we're capturing the uh, conversation around, is the market overcrowded or is there enough and more opportunity to create 10 fives and 10 MobiQuicks, right? And newer players can learn from the incumbents as they become incumbents in journey, and newer players do better job at the same time, right? And we continue to believe that whether you talk about payments, lending, insurance, wealth, enterprise SaaS, banking SaaS, embedded finance, commerce, across the bucket, and you can peel off the layer between them and look at other subsectors within that. Each of them gives you 3 to 10x opportunity to grow from here in the next 5 years itself. It depends upon the management team, the capabilities, the capital, the technology they're using, right? As I think Akshay alluded at a point of time, AI is fundamentally changing the cost of infrastructure, right? It's fundamentally changing the OPEX businesses, right? That can change the way profitability is looked at, ROEs are looked at. So all of those things will evolve, according to me. And I think India, we are doubling down on AMCs, we're doubling down on wealth, we're doubling down on capital markets, we are doubling down on lending, we're doubling down on insurance, payments for that matter. We are one of those who are coming into payments slightly later because we still believe that there's lot more can be done beyond consumer and B2B payments. So opportunity is large. I think across the bucket we'll see 3 to 10x growth in sectors and segments, and good companies will be built out. And what comes from behind, nobody knows till the time it comes, right? So we have to wait and watch and hope for the best assets to be built out and listed over the next 10 years.
I think Sagar has prepared a list of companies which may be in the pipeline, and tracking really well. Noted. Akshay.
So I would say I'll echo both the Basna's and Sagar's point. It is the largest category. Everyone has made money previously in the category. So whenever a new player comes, you know how to measure and what could be the success of it. I would only rate to give one part. I think as the investor community jumps in the IPO bandwagon further, it is based on two rules, right? The first rules is build companies which are sustainable for a very long window. Right? You can't have an IPO driven company which will ever not do too well, right? So that's the first principle that you look at going behind putting in money in an IPO driven company. The second part is the fundamentals that you should cause some dramatic improvement to India or to society at large as you build larger enterprise. Right. I believe the category that we cause a large amount of impact, right? And we believe that as our category matures, it can really change the way India can grow further. And in that growth cycle, there is going to be a journey where others will benefit and the public market will benefit from it. And we'd love to see that growth coming in the category.
Sure. Let's hope that growth comes in every category. At least we are in the best of times. And as I said in the beginning, more than 70 companies have already received an approval from SEBI, and every day there are new companies filing for DRHP, and many top companies from the fintech space are also line up in the IPO race. I think that was true meaningful, listening to all of you, and I think those were really relevant thoughts. So thank you, Akshay, Sagar, and Upasna for sharing those meaningful thoughts. And thank you so much for watching ETBFSI special show. Thank you.
Thank you.
Thank you. Thank you. Bye bye.